Hello everyone, happy Monday. If you guys ever watched the movie Space Jam with Michael Jordan, there's a place called Moron Mountain. Moron Mountain is where all the bears that tried to go short at 421 are from. So in today's video, we're going to explain how we weren't living on Moron Mountain down at 420, 421. We were buying calls. We were buying the dip. Gold today shot up. Our calls went up 50%. We're holding on to SPY 421 calls. The SPY closed at 432. We're $11 in the money. Our calls, multiple calls that we got, they're up almost 100%. While you guys were living on Moron Mountain, wanting to short for an extra, what, $4, $5? Oh, we're going to break 420. We're going to hit 415, 416. How'd that turn out? Today, we're going to take a look at the overall market, S&P 500, the NASDAQ, the Russell, the dollar, the bonds, the yields, the VIX, and the large tech stocks. All right. Without further ado, let's get started with the video. Perfect price action. Came retested perfectly to the dot. Came to this trend line. This is the daily chart of the SPY. Magnificently came to this trend line. Touched it to the cent, 427, and bounced beautifully. 427 was such an important level of support. Came back, retested, made new highs. Very, very simple. And it doesn't get any cleaner than this. So clearly, right, for the SPY right now, we just closed above the 38.2% fib. Let's quickly take a look at the NASDAQ. NASDAQ clearly closed above the 50% fib. And what have I been saying time and time again for the past few months, guys? When the large tech stocks are leading the market, when the rest of the market, if the SPY, the IWM showing weakness, but the tech stocks, if they're showing support and they're starting to show some strength, you have to be bullish. I was bullish on the SPY back here when we first retested 443. The reason for that was because the tech stocks were showing strength. When everyone was talking about, oh my God, we're going to be bearish, we still bounced back up from 443 to 451. So it works time and time again, guys. The large tech stocks drive the market. So we've been monitoring them absolutely perfectly. And it started with the chips and the AI stocks, guys. It doesn't get any simpler than that. So when you take a look at Nvidia, early on when all this was happening, Nvidia was showing support. Today had a bit of an inside day. But regardless, we see that the strength started with Nvidia. AMD as well. Started with AMD and Nvidia. Then it trickled in. We've been monitoring this for weeks. It trickled into Google. And Google is now almost at 140. So these stocks have been leading the way. And then a bear's worst nightmare also occurred on Friday. We saw Apple starting to show some strength. And then today, it finally broke back above. It came back, retested, and broke back above the 177, 178 level. Pretty perfectly. Now we have resistance on Apple at 180. And it doesn't get any better than this. We take a look at Microsoft. Microsoft also made new highs. Meta made new highs. Netflix, unfortunately, is bouncing as well. And Amazon also started to do pretty well. It got some bids, held support really, really well. So now I'm expecting money to start funneling into these tech stocks that were the biggest losers. So Amazon, I'm expecting Amazon to start getting some love here. So it only makes sense that Amazon is going to start getting some more buyers here. Apple looked very similar to Amazon. Now Amazon, I think, can start getting some love here. I think, I could be wrong, but the large tech stocks that have been the biggest winners, they're going to have to start consolidating at levels of resistance. It'll give some time for Amazon, Tesla to break out as well, and Apple to continue breaking out also. But yeah, we'll see. Don't do anything crazy or anything too heavy, but that is my thought process. The market could continue going up higher. The most important thing to realize is that Wednesday morning we have very, very important news. Then we have the Fed minutes coming out at 2 p.m. And then Thursday morning we have CPI data. So a lot can still happen. Just enjoy the bullishness while it lasts right now. What we need to see is CPI data coming in less than expected. That'll be bullish for stocks. So, yeah, you know, it's been working out pretty well. Now, what I want to take a look at to get a better understanding of the market as a whole, we need to look at the yields, the dollar, and the VIX. Okay, so first off, let's take a look at the dollar. So we know that the dollar, it's important to look at because it has an inverse relationship to the market. So if the dollar is strong, then generally the market should be falling lower. And what we can see here is the dollar obviously had another reddish day. But what's most important to realize is it's starting to hold support pretty well. This weakness, I don't know if it can continue, but especially with a candle like this, we're trying to really hold. So let me explain. So a candle like this occurring at the top of a move is way more bearish than a candle like this appearing at the bottom of a move. So basically, you know, I would not be bearish. Essentially, the dollar and the market are inverse, right? I would not want to be bearish on the dollar over here. The same way I would not want to start being long and bullish on the stock market over here. Okay, so that's currently the issue that's going on with the dollar. Like in terms of day trading and in terms of like patterns that usually happen, if you do go short on the dollar here, there's a small chance, but it could end up just breaking down much lower. But we can't trade based off of things that don't have a high probability, right? So it makes sense now to wait for some structure, wait for a bit of a bounce, maybe even a green candle, a retest of resistance, and then a reshorting opportunity. So all in all, the dollar doesn't look exceedingly bearish. Obviously, it looks bearish, right? That's not what I mean. What I mean is what it could do in the next few days. It doesn't look like it'll just continue falling lower. It looks closer to a point where it'll start to want to bounce. And if it does bounce, that's going to be bearish for the market. Okay, so pragmatically, that's what's going on the dollar. Let's take a look at the VIX. The VIX is showing a bit like it's a bit more complicated to to explain what's going on with the VIX because the bonds were closed today. So a lot of the volatility that would have appeared due to the bond yields, due to the bond market being open, is not really there. So essentially, this is just purely based off of equity moves, and today was kind of a weird day in the market because the bond market was closed. So yields, the move index, the volatility that comes from the yields, everything, all of that stuff did not take place today. So that's why we had a bit of a weird move on the VIX. And regardless, now just zooming out, taking this on face value, right? And once again, just explaining that the VIX has an inverse relationship to the market as well. If the VIX is showing strength, then obviously the overall market should be falling. So right now, this is clearly just an ugly little candle, ugly inside candle. This is still not a bullish situation on the VIX. We should end up making new lows. And if we do make new lows on the VIX, then that is going to be bullish for the market according to the VIX. Okay. Now, so the last thing that we can take a look at is gold. In what world would it make sense to be bearish on gold after we had a huge move already to the downside, a huge gap down, and then a continued move to the downside afterward? So I think we went long over here. On October 3rd, we got into 170 calls. And clearly today, those calls We called them up, but bad joke. But regardless, you can't trade the market based off of bad news. You can't trade the market based off of headlines. You can't really trade the market based off of macro news. Oh my god, the macro is so bad for the market. Oh my goodness, what's gonna happen? The yields are at the highest level they were since 2000, blah 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 blah. You can't trade based off of the news that hits the market, because the market is forward looking. And regardless of like getting too confused with, oh, how forward looking is it? Is it 6 months forward looking? Is it 1 year forward look? Regardless, right? A lot of the market, all it is it just comes down to structure. So for example, if you follow the crypto market, in crypto, normal people, obviously, whatever, like if you have access to the coins and everything, they can become market makers. Okay. So based off being a market maker in crypto, we can have a coin, you call it anything, right? When there's a specific pattern that's being built on that coin, say for example, a bullish pattern, right? A bullish pattern is appearing and the coin is now trading at a very, very important level of support. Right there, we could choose to announce some really, really important news, and that would drive the market up. But in general, stuff like that doesn't always happen, but it happens. It's prevalent in the crypto market. And the reason why I'm explaining that is a lot of it still boils down to structure of where we are on the chart as a whole. So if market makers did want to try to manipulate something, for example, you could see a lot of that happening before, like a year and a half ago with Elon. Bitcoin would be at a really, really perfect opportunity to break out. Elon would launch or say some like really bullish news about Bitcoin, and it would cause Bitcoin to propel upwards. So my point is that if down here the news and the media is reporting a lot of bearish things for the economy, obviously the economy, whatever is going on with the economy, obviously prices of products skyrocketed, you know, like there's no comparison. Obviously the average person is taking a huge hit, right? We have a lot of expenses. But what you need to realize is that the news media is paid by banks, and banks want us retail traders to be liquidity. So if at the huge bottom of a market, after a huge move to the downside, they start saying, oh, you know, it's Armageddon, it's time to be bearish. Oh, it's time to be bearish, guys. The yields are all time blah, 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 blah. You have to realize that they want you to start becoming short at the worst possible time, because they don't care about you. If you get swayed and you're easily manipulated by news and you trade based off of CNBC news headlines, then you are essentially being used and manipulated. And that's a tough pill to swallow. But let me explain what goes on. So say, for example, you start going short down here at 420. You could have just chose to blaze it. But, you know, some people chose to blaze it a little too hard and they want to start going short, right? At 420. If they have a certain amount of money that they're, so if banks and hedge funds, etc., are willing to put a certain amount of money to go long, right? They don't want you to also go long. They don't want you to make money. They would rather you go short. Then they could inject their long money, their money into the market to start propelling it upwards, and then force you guys to cover your shorts and then go long afterward and chase the move and help propel the initial injection that they put in. They want you to help push it up. So they never want you early to the party. They want us, they want retail traders to be a launch pad. That's always usually the case. Okay, so at the most extreme lows and at the most extreme highs, they use retail as a launch pad for a move to the downside or the upside. Things get really, the news gets very bullish at highs, and it gets very bearish at lows. So be cognizant of that. And regardless, you just have to trade the structure. So once again, guys, you cannot go short at levels of support. Please control your impulses, control the fear in your guys. I make videos about this, right? I'm not getting paid for any of this. I make videos about this. I share these trades and everything on the apps and on the app and everything. Like you have to realize I don't just talk out of my butt. You know what I mean? Like, I legitimately am just doing the best possible trades. And the best possible trades are to always try to go long at support and then go short at resistance. Don't try to short the whole. There's certain things that appear time and time again in trading. You never short the move when the downside move has already occurred. And yeah, you know, you just have to realize the market tends to do the opposite. And just please keep in mind everything I was saying in terms of the banks and hedge funds and all that good stuff. All right. So hope you guys have a wonderful rest of your day. Please make sure to like, comment, subscribe, do all that good stuff. And I'll see you guys bright and early tomorrow morning. Thank you.